When you hear about the retirement crisis, it sounds like a huge problem that's impossible to fix. We shouldn't have a retirement crisis in the richest country on the planet, and there's a really simple way to solve the problem, and I can sum it up in 4 words and 1 number. Give every baby $10,000. Imagine not having to save for retirement while you're working your entire life, and just knowing that the retirement money will be there when you get there. This is the way to do that. I'm Nir Kaissar, and I like digging into the math behind our biggest problems, so let's dig into the math behind the baby cash. A year ago, about half of workers said that they are very likely to reach their retirement goals. Now that number is closer to 1/3. That's an awful feeling felt by millions of people. On average, workers said that they need about $2 million to afford retirement. But workers face 2 problems when saving for retirement. The first problem is money, and the second one is time. The money problem is that the median full-time wage in America is $57,000 a year, which doesn't leave a lot of money to save for retirement, especially for the half of workers who are making less than the median wage. There are about 120 million full-time workers in the US, which means 60 million people are making less than the median wage. That translates into about $27 an hour based on a 40-hour work week. Now think about how impossible retirement savings is for people who are making minimum wage, which is closer to $7 an hour. The second problem is time. Most people, if they're lucky, have about 30-year runway to save for retirement. Now consider that if you save your money and you invest it over a 30-year period, you can expect your money to grow after inflation by about 7.5% a year, which is what the US stock market has done historically. Meet Bob. Let's say Bob can grow his savings by 7.5% a year after inflation. Bob would have to save $16,000 a year for 30 years to accumulate the $1.8 million target I mentioned earlier, which is basically impossible for half of workers, but I'm not here to dwell on the negative. With a little imagination, it's possible to give workers more time and money to reach a dignified retirement. As things stand, the retirement math does not add up. Most retirement accounts invest in both stocks and bonds because people like the security that bonds provide. Diversified funds have returned about 60% as much as US stock funds over the past 10 years through 2021, implying a return closer to 4.5% a year after inflation. At that rate, workers would have to save closer to $29,000 a year for 30 years to reach the same retirement target, a savings rate even fewer workers can afford. A more efficient way to save for retirement is to combine the growth of stocks with the power of time. If every American was able to invest $10,000 in stocks at birth, that money would grow to roughly $10 million in 70 years, which is about $1.8 million in today's dollars. For those of you doing the math at home, that assumes a growth rate of 10% a year before inflation and that the money compounds quarterly. I know what you're thinking. Where is this $10,000 per American going to come from? The answer is it will come from the federal government, and it won't cost as much as you think. Let's look at the numbers. Roughly 3.7 million babies are born in the US every year. Putting $10,000 a year for every baby would cost about $37 billion a year, adjusted periodically for inflation. That's a fraction of the $1 trillion we spend every year on Social Security. And think about the fact that funding everyone's retirement at birth would lower the burden on Social Security and might even replace it one day. And actually, it might cost even less. One thing we could do is have the program be need-based, so that you would receive the difference between what you saved at retirement and $1.8 million. And for those people that save over $1.8 million, they would receive nothing, and that money would go back into the program. One obvious drawback of a need-based system is that it could be a disincentive for people to save, but it's hard to imagine a situation where willingness to save is a bigger problem than people's inability to save. Some might also be hesitant to entrust retirement savings to the stock market, but the stock market is exactly where they belong. Yes, the stock market is uncertain and unreliable in the near term, but over the long term, it has been very reliable, and no one has more time than the federal government. The investment could resemble a stock market tracker like the S&P 500 index, which would be cheap and easy to manage. So let's be honest, unless we see a substantial rise in wages, and wages have not risen meaningfully since the 1970s, this retirement crisis is not going to solve itself. The US stock market is the envy of the world, and the federal government has the time and resources to leverage it for everyone's benefit. So let's make retirement more attainable by giving every baby $10,000.